All right. Good afternoon, everybody. This is Joshua from Pacific Union, sitting in for Michael, the head trainer. So I welcome everybody to this exciting class, and I hope you get tons of value after the course of the training. All right. So today, in continuation to our series, we'll be looking at introduction to analysis, but this time around, we'll be looking at support and resistance. And if you stay close to trainers, you know that support and resistance is something that comes, occurs time and time and time and time, in the mouth of traders. So this is one of the pillars of trading. Now, one thing to note is that support and resistance, for me, I'll call it one of the pillars, for traders, and something you need to lay hold of, understand the basic, and before you could trade profitably in the market. So today we'll be looking at introduction to technical analysis, support and resistance. So here is a quick thing we'll be looking at today. So let's look at the overview of the lesson. All right. So a quick outline for this lesson or this tutorial will be, first we'll be looking at a review of what you have learned in the previous class, so that we could have a better foundation to build on, so that to continue. So I will have to link it to what you've been taught earlier on. So secondly, we'll go fully after linking, refreshing our minds and memory. We'll be looking straightforward to support and resistance. And thereafter, we'll be looking at the benefit, why you should learn, or why you should trade using or referencing support and resistance. And the third thing you learn is you learn how to draw them, and again you learn identifying support and resistance. So these are the key things you will be looking at even in this training course, as you will have it. All right, so first things first, I want to let's have a kind of brush up of our knowledge of what technical analysis is. So for someone who have maybe you've attended the last class, and you want to learn about support and resistance, you need to learn it on the right foundation. So just to go back a little on what was taught on the concerning technical analysis. Technical analysis is basically, your study of price movements in the market. Now, you've learned that in this business of trading in the global financial market, for you to be able to trade, you should know the possible direction, the possible place the price might likely get to, so to make the optimum price. For instance, I normally in my classes, I ask people who will buy a marker that maybe goes for 15 naira, who will buy it for 1,000 naira. Usually everybody say no. Why? The reason is because you know the worth of that particular price. So if let's say if you enter the market one day and the seller should tell you that, oh, this market that you've been buying for 100 naira, is just 2,000 naira. Now the thing is, you already know the worth of the market. You will not buy. You will not just buy at 2,000 naira because the seller just feels like increasing the price. So what am I saying here? What technical analysis does is, it's a kind of, you are studying the price. Now, one thing I want you to note is that in this class or in this training, we'll go deep into it. And please, I don't want you to be scared of any technicality, or don't be scared of maybe the grammar or anything. We'll try to break them up, as simple as it gets. All right. So as I was, saying, now you wouldn't buy. Why? Because you know that the price of this marker is what? Is 50 naira, and the seller makes it to 200. So even if you're a trader, you have to what? You have to wait for the price to come down before what? Buying. And that is reasonable and sensible buying in the market. So often at times you find traders, that's new traders, they just they want to go into the market, they want to just trade when it's going up, they want to buy when it's going down, they want to sell, which is not wrong, but then they don't have knowledge of why they should be doing what they are doing. So, and this lesson of technical analysis look at what? It looks extensively at the what? Studying of prices. So for you to what? Understand the trend of price, so you could make decisions. So under technical analysis, you have study of chart patterns, or you study the market, or you study price using chart patterns. You could use indicators, the basic thing or the overall thing that it does for you to what, just to know, be able to what, forecast to a greater extent. So basically, it gives you a graphical representation of past, present performance of the market, which includes and informs trader about potential future direction before entering the market. So you could see now that the basic thing that we want to know, or the reason why we use this, or the reason why we use it is just to know the potential future of the market. So basically, you wouldn't be able to say, oh, some people just you can't say, it's already going up, it will go up. You just use that slang to just have that final say that, oh, it will go up, like you're already controlling the market. So remember, from the basic, we say no one controls the market. It's actually decentralized. So the market is controlled by what? The forces of demand and supply. So forces of demand and supply could also, you could study it, you could have an idea of what the forces of demand and supply are doing at a particular time using technical analysis. Also, let's go on. I think that in our former class, you looked at the different methods of what trading or analyzing the market. You could use technical analysis, fundamental analysis, and sentimental. So the focus of this class today is to look at the technical analysis, and under technical analysis, we'll be looking at what support and resistance. So let's just run through this benefit of analysis quickly before starting. All right, so let me check whether everybody's still following. Okay. I think few people. I think I have ID something here. All right, that's good. Okay, that's good. Welcome everybody. All right, so let's continue with what we have here. So basically, we're talking about the benefit of what? The benefit of technical analysis, just in a bit to brush through what was done the last time, so we could have a good foundation to build on. So basically, it just helps you. I think I've hammered a whole lot on helping you to know the future direction, the future trend of the market. It helps you to just find the entry, the exit. You don't want to be buying at the point where you're supposed to be you'll be selling, or you don't want to be selling at the point where you need to be buying. A good example of this would be remember during the pandemic period, the business of news marks was kind of in vogue, where people craft different kind of nose marks. You see different designs, and people were selling something you could get for less than, or maybe for 100 naira, then you could get for 500, in some places even 1,000 naira. So because why? The pandemic, the situation around the nose mask market was actually favorable. Now imagine an investor after post-pandemic scenario, you want to go into the market, you see that you would not actually make the kind of profits you would have made if you had gone into the market. And so this is actually what technical analysis helps you to do, to know when to enter at the right time, to know when to exit the market, to know the buying, where to buy, where to sell, to have an idea of the past price. Because one thing with price is that history will always repeat itself. It helps you to identify trends, retracement, continuation, and reversal. So basically, that was what you was being taught by Pacific Union the last time we were here. So now today, up to what we are doing here now, the basic thing, what brought us here is the word support and resistance. We're looking at what support and resistance. Now, many of you might have heard of support and resistance. So now I like to, the most basic way where I explain, or how I explain rather, support and resistance is this. Now, support, like someone standing. Support is something that just helps you to stand on a platform. While if you want to jump in a room, something resisting you ahead is the ceiling. So support and resistance is, you can look at it that way. So in order not to mix it up. So basically, we're looking at support and resistance. Support and resistance, just like I said, is likened to what? The flow and ceiling in the market. We could call it the price flow and ceiling in the market. So support is the flow. The ceiling is the resistance. So I'm sure in basic economics, you know what price ceiling, what price ceiling is, kind of limitation for, the highest point at which price could get to. So basically from my diagram here, you could see this red zone here, that's, depict what resistance, and this one that depicts what support. So price comes down and what it bounces off the support and heads back up. So basically support is an area on your chart that price has dropped to but struggle to what breaks below. Yes, so support is that area, that region, or that portion of your chart by which what price actually go to that place. Instead of price should go down or should descend lower, price would refuse to what break that place because there is a support area there. So later on, we'll be looking at what makes support support and what makes resistance resistance. So resistance is also a what? It's also an area on your chart that price has what risen to, but struggle to what breaks above it. Just like the example that I gave. Now it will be virtually almost impossible for you to in a room to jump above the ceiling. If all things being equal, the ceiling would resist you if gravity does not do its work before time. So basically, what support and resistance does now, we're looking at support and resistance in terms of price. Now, you could look at it as something that controls price to some extent. Now, meaning that when price gets to that resistance zone, it tends to what? It tends to come down. Now, support and resistance analysis, is important and part of trading because what? It can be used to select trading opportunities, where to buy, where to sell, where to take profit, and where to cut your losses. Exactly. So later on, we'll be looking at just in a few moments, we'll be looking more on that, right? So support and resistance is something that is very, very important as a trader. As a beginner, you need to, you really, really need, to have a good foundation of support and resistance. So that's why now, we'll look at some of the benefits why you should use, support and resistance. Now, one of the reasons why you should use support and resistance is because what these are the same levels that what banks, hedge funds, and other major player places their what place their order. Now, you as a trader or as a retail trader or as a trade as a trader, let's take it that way. Now, you want to have other people's idea of their entry or possible exit. Because if you have other people or the majority idea, it will help you also to make a decision. Because in this market, the majority, if you would use that democratic term, now, in this global financial market, when it comes to price action trading and all that, now the majority would often at times carry the what? Would often at times carries the vote. So basically, this would help you to know, where most of these people with the majority of shares, with the majority of holders, let me permit me to use that word, where they places their word, where they place their order. So where they place their order, you would have an idea not to, make a contrary opinion there because their major move could wreck, would not go in your favor. Exactly. So that is that about it. So it's when we talk about banks, we're looking at Goldman Sachs, JP Morgan, and most of these big banks that we have. So, you want to have an idea of where the majority are. So basically, there's what support and resistance does. So it kind of exposes, it tells you the secret, basically. And just like any tool, I tell people, just like any tool, once you get the access, get the knowledge of, using a tool the right way, you get the best out of it. Just imagine you having a fine leather cushion in your house. Now let's look at knife. Is knife good? Yes, you use knife in the kitchen to make your work easy, in terms of cutting and all that. But then when you see your child bringing that knife close to your leather cushion, maybe that you bought for maybe 50 or $10,000, what would you do? Right, so what would you do? If your my guess should be as good as yours, you would at least you will scream at you will scream. You try to if not screaming rather, you try to distract that child and take that tool or that weapon. You try to collect it from the hands of the kid, right? Why? Because it's taking the wrong thing for the cushion. So what it means is that every tool. What I'm trying to say here is that every tool is good. Or you talk about a hammer. What does a teacher has to do with hammer? But then a hammer is useful in the hand of the carpenter, right? So now, because of what both people they know how to use, I'm talking about the carpenter now uses the hammer well. So now the support and resistance now, once you have a clear knowledge of support and resistance, it reveals to you, it exposes to you where this major level, this banks, this hedge funds, and major players in the global financial market looks at. And it also what helps you to pick the best entry, to pick your take profit, to take your stop loss, and to make good, meaningful positions out of the market. And also it helps you to see these levels where market has helps you to reference the past where market has or the price has where buyers or sellers have indicated interest in time past. Maybe you could see referencing your charts back in time. Now you could see the best points where sellers love to come in. You also see the best part where buyers love to come in. So exactly like this, you would not want to go in the market where buyers want to come in, you start where or majority of buyers are coming in, you want to sell. No. So this is what support and resistance enable you to do. So and what support and resistance also does is that it also enables you to have a kind of knowledge where the number of buyers generally exceeds sellers. So when buyers exceed sellers, so there's a force. We're referring now to the forces of demand and supply, or the forces of the resistance and support. So now when those forces push the price up, so definitely it clearly shows that what the buyers pushing the price up, you see that the sellers are losing strength. So some of these things, it's what you could understand with the knowledge of with a good knowledge of demand and supply. All right, so let's go forward. So these levels are also levels which a lot of traders are willing to sell or buy. So if you look at all these things, it's just like talking more of buyers, talking more of sellers, region, and all that. So I'm sure you want to really be interested in this. So as we go on, I want you to pay close attention to it. So if a pair is currently on a downtrend, for instance, and it comes to a level where there is a lot of buyers. Now, at that point, it's the support and resistance that you've plotted out that will reveal that to you. So at that level where they are, it's on a downtrend, it comes into a zone or into a level whereby there's a lot of sellers there. So as a trader, you'll be looking for what confirmations to sell, right? So that is part of what this does for you. So it also helps you to identify potential levels of analyzing the highs, the lows, round figures in the market, stuff that enables you to just make better decision in time. Yes. So basically it helps potential levels of support. It helps you to identify potential levels of support and resistance by analyzing price action, the highs, the lows, the round numbers, the figures, the trend lines, the pivot point, the Fibonacci, just to name a few. So support and resistance work hand in hand with some of this, with other tools that you have even in your trading application, just for you to have a good understanding of the zone. And price support and resistance are level at which market have proven in time past to have interest for buyers and sellers. I think we have looked at that point. So now we'll be looking at how to use support and resistance level. So that's what we're looking at now. So you see this chart that I have over here. So you see something that at this point, price was coming up here, was gradually going up. That's from the left, gradually going up, broke this support, this blue support zone, heads up to the high level. And when it gets there, couldn't break that zone. What the price did? Price did what? Price came down, it reversed down. So price going down, price will have what? Break this support zone, but because this zone is a level whereby what? Buyers, it's a level of interest for both buyers and sellers. So buyers, knowing that buyers, are in this zone, buyers to step in to take the price off. And you could see it like one thing that I like to tell people is that you could see this like a kind of a, you could take it as a tug of war ish in a way, because the downside for the support region, you could see that the people that are willing to push the price, or people that are willing to just buy, push the price up, and this resistance, the people that resist, or the camp that resist now, they're the ones that are willing to push the price down by doing what? By selling. So you see that, referencing this line, drawing it ahead, you see that at this point here, the support on this level, becomes what? Resistance here. That you see the support become resistance. So this level was being tested once, twice, and thrice. So the more tests you have, I think that should be a bonus tip. The more tests you have on a zone, it gives more advantages, or more importance to that level. So before you could make your entry. So you see that finally at the middle here, the price finally broke through the support. So basically, once price tested once, as a trader, you anticipate or envisage a second test. After the second test, you could make a good decision with the third test. So by the time you're looking at the fourth test, it's not really a textbook thing, but then it's ideally 3 touches, with it. So I think there's an experience I had. Usually, I give people this example. Now, once you have a door, you hit that door maybe with a sledgehammer or something. You keep hitting it times and times and time again. So the more you hit that door, the weaker it becomes. So it gets to a point where a little hit will just crash down the whole thing. So in a way, this is actually an advanced stock though, because it's actually something there are actually things that you need to consider before all this it's taken into consideration. So that's what we call breakout. So you see that at this point there's actually a breakout. So I want us to look at some other examples before we look at the chart. So basically you have it, and one of the ways why support and resistance help traders is because, for instance, you have your zone marked out already. So you're not really having you're not being tense, or you're not on that psychological motion of maybe having a fear of missing out or something, because you know that, okay, this zone that I am on, it's a support zone, okay, meaning that it has tested maybe twice. It means that price is likely to bounce off the top, bounce on that support or resistance zone. So that is the idea behind it. So here on my chart, you see something. This red zones that have been grouped here, has been marked out as resistance zone. So you have this place marked out here as resistance zone, and this the top side too is a higher resistance zone. Now, what is the resistance? Price could not break beyond that level. So that is that about that. So the second one is the support. So you could see the support for this support that we have here at 1.2245. As you see it at the right side of the screen, you see it here. So at this point of 1.2245, you see that price actually tested it once, twice, and 3 times. So you see that price has tested it. Now in the present, what I mean present is go to the end where the current market price is. Now you see that although price is not here, we're still referencing this zone. Why? Because the price has already come over here to the to the buyer zone, to the resistance zone, sorry, and has tested it. It's now going down. So there is actually a likelihood of price coming to test this support zone in the future before bouncing up. So a bonus tip here will be, now you could see resistance zone as a zone whereby you have group of buyers, group of sellers group of people waiting for price to get up there before what selling. And you could look at the support zone as a level or as a zone whereby buyers are waiting for price to get up there before buying. Now, those institutional investors will be more interested in all these key levels. So by the time if you have that idea, so you would not want to be buying what you're supposed to be selling or selling where you're supposed to be what? When you're supposed to be buying. All right, so let's look at another example. So we look at this. Now you see that this is a very clear or a clean resistance and support area. And what you'd have here is what? Now you see this green line is represented by what? The resistance level. So by the time price, moves up here, gradually retraces, move up here, retraces, up until this point. You see the long weak rejection candle that we have here. Now the price rejected. The sellers had to what? Because this zone, we have group of people what selling. They had to do what? Push the price down here. So that's why we recognize this place as a resistance area. So obviously we're looking at everything in hindsight now, but price moves gradually downwards to the support zone. Then from the support zone, price later will move on to this resistance zone. Now there's something interesting you note here. So as price gets here, you discover that what price actually rejected. That's the second touch that we have here. You see that there's actually a rejection here. Now what you ask yourself as beginners is that, okay, did price just all on its own just reject it? No, price didn't reject. Now, one of the reasons why there was a rejection here, because there's a lot of orders here. There's a lot of what people waiting for price to get to that point before doing what? Before selling. So that is what we have here. Now, if you have this idea, even in your trading, this is something that would, shape the way you trade. This is something that would shape the way you see the market or you approach the market. For instance, a good example over there. So imagine at this second resistance zone, now, because you see that, you see from this ground, from this place now, you see that, okay, this is a long bullish candle. Okay, you see that, there's momentum in this market, it's buying. Let me buy because it's buying. Let's say for some reasons, the price was already at this resistance zone, because you see that looking backwards, you see that the price is buying or was buying. You now decided to buy without referencing this resistance zone. What would happen to you? You will lose or you will lose. Can someone answer that question? Okay, I'm sure your guess is as good as mine. The thing is that you won't make more profit. Why? Because there are orders and people waiting to do what? Sell at this zone. What are the resistance ninjas, if you may call them that? All right, now you see at this zone of support region. Now you see something very interesting here. Now we could have multiple support and multiple resistance. So one interesting thing about this picture is this. Now you see how on the second test of the resistance area, you see that price did what? Price moved down. Now instead of testing the initial support, price created what? Another support level that has been referenced in time past. So as a trader, it will also be wise for you to do what? Reference that. For instance, now price get to this zone again. That's for the third test, because we have one, we have the second test, and we have the third and the last test based on this image that I have here on my screen. Now on this zone, you see that what? Okay, as someone who wants to go, I'm sure we all know by now, if I say I'm going long, it means buy, right? And if I'm going short, it means sell. Now, at this third test of the resistance area, now, what support and resistance will help you to do here is what? Is to know where to take your what? Profit. And know where to do what? Cut your losses. For instance, now, let's pick take profit for an example. Now, for this last test here at this region, now you could be targeting this initial, so this second support that was created here as your TP1 before selecting if price breaks through the support level. Then you could have this as your what? TP2, just as a support. So basically what support and resistance does is, apart from knowing when and how to enter, it enables you to know when to stop, when to exit the market as well. So basically, let's look at my other slide I have here. So what we'll be doing basically at this point is, don't worry, we're going to be looking at the live chat in a minute. But before then, I just want us to have some basic ideas of support and resistance. Now, there are things that you could use to identify support and resistance. Now, we have majorly three tools that are available to you, because now one thing someone might be thinking, okay, support and resistance is important, buyer's region, seller's region, okay. A good and our intelligent mind will ask, okay, how can I identify, the support and resistance? So one of the best ways, to analyze it, that's what we'll be looking at, which we have three. So the first way to, identify support and resistance is by using your what? Horizontal, the classical horizontal, lines. So on your chart, you have horizontal line, which in a minute, I'm going to be showing us how that works with even live chart. Now, you notice that what at this level, at this region, price got here, and it looked as if price was going to break out here, but it was a false breakout, because what, the around the zone we have it as what, buyer's zone. So the buyers actually what, pushed the price up until it got almost close to the resistance zone, even on top. So one other thing you note here is the one, you notice that price actually tested this one, two, three, before it what, breaks out. So usually or traditionally, now you watch out for at least one test, two tests, and you make a decision on the what, third test. Basically, there are different ways, to apply the support and resistance in your personal trading, but this is actually a traditional method that, I've heard and I've, used over time. So basically, you go for the first test, you look at it, and you could trade using the second test or the third test, because you notice by the time, based on this chart, by the time price gets here for the what, for the fourth test, what happened here? This is what is called a what, a breakout. And unlike this initial touches that we had here, these were false breakout. But here, this is what, this is a real what, this is a real breakout. And one good thing about support and resistance is this. Now, I don't want you to, mix it up, because at some point when your support is being broken, I think that's what I want you to know. When support is being broken, note that area, because it would likely in the future turn to what? Resistance, which is exactly what we have here. By the time you look at this, the next time price, came to test this zone, it didn't test this zone as support again. It tested it as what? As resistance. So at this point, so it's a kind of, you could see that the price or the market's situation has actually changed. Let's imagine the market was actually initially ranging from here. Not really imagine, you could see it just between this point, between this zone, between this rectangle as you have it. But when it broke through here, it tested it up here. And you could call it a pullback to the what, previous what, support. Now it is acting as what, your resistance zone. So it continues. And one thing I want you to notice that usually at times, when your support is being broken and retested as resistance, it actually shows that what, there is an imminent what, downtrend, and there's a kind of momentum, a kind of strong downtrend that's been what, established. So that's that about it. Let's go, let's see another example. Okay, so one other thing that you could use. Now, the first thing that we looked at was the using what, horizontal lines to draw what, to draw support and resistance. Using horizontal lines to draw support and resistance, which we'll be looking at in a minute in practical terms. So now the second thing we'll be looking at is what, is the trend lines. Now, using trend line to mark support and resistance. Now, at this point, I want you to note something. Now, support and resistance, it's not really for beginners. You would not really have that in using this example that I have, which is usually horizontal. Now, support and resistance could be dynamic. You could have a dynamic support and resistance going in a diagonal way. But one thing you notice, just like a pattern, now the trend line, you could see it as a pattern. You see, if you draw the trend line, notice that why does price get to test this trend line often and often and often again? So you could have it as what, a kind of a diagonal support, a diagonal support. So if I'm to plot this one now, you would have it as a what? A diagonal what? Resistance. But then don't bother yourself by calling it either diagonal support and resistance. Support and resistance, it's the same as support and resistance. So you just have to mark the zones, so you'll be able to have a good decision. So and one bonus tip I want to give us here is when you map out a diagonal support and resistance, now heading giving you higher highs, just like we have here. Now that this signify what? An imminent what? Uptrend is what is either emerging, or it's the trend or the market structure type is what? Is an uptrend. And likewise, if we have it flip in the other way around, we're likely to see that what? An imminent downtrend where it gives you lower lows, which I'm going to show us later, which that signifies a what? A downtrend. So one of those things you could use to draw or to identify support and resistance is the what? Is a trend line. So the first thing we looked at was the horizontal, and now the second thing we're looking at what is the what? Trend line. So the third thing we'll be looking at is the what? Moving average. So just to give you good guides, this horizontal lines and the horizontal lines, the moving average, and the trend line will give you what? Give you one of the best guides in what? Drawing your support and resistance at all levels. So usually there's something that in the trading circle, it's just known as the 50 EMA, that's 50 exponential moving average. Now it's some people call it the golden moving average. Now what it does is that now as you plot out your moving average, I'm going to show us how to plot that in a minute. So typically, you discover that what price gets to what tests this region before going down. So you see that price broke through here down to the downside. It tested it as what? Tested as resistance, came down, tested it here again as resistance. So price bounced off the what? 50 EMA. So it could be, you could use any EMA, you could use 20, you could use 100, you could use whatever. So it depends on the trading strategy you're using, but traditionally the 50 period moving average will give you, a good support and resistance, or a good drawing, or a good or more valuable support and resistance to look out for. So you notice that it tested it was 1, 2, 3, 4. So one thing as a trader, knowing that, plotting your chart. Now you come in, you're plotting your 50 exponential moving average. Now you notice as a trader, what decision do you want to be making here? So you want to look at what price getting to what? To test that 50 period moving average. Now, for the closer the price is, now used based on historical facts. Now, for this chart, we have just maybe 2 tests. So let's imagine it has only tested it 2 times and the price is still far away. So you'll be looking at what? Bearish confirmation, bullish confirmation towards the trend, to just trend, to trade, to just scalp or make good profit out of it. But ideally, using it, you just want to use it as what? As your resistance. So immediately price gets to this 50 period exponential moving average, you look at what? You look at shorting, you look at selling at that zone. Why? Because price have what? Been testing that zone. And one thing I want to tell you is that it's just a warning. Now you use most of this tool, you have confirmation. You don't use a tool, support and resistance alone to trade. So that's a bonus tip I just want you to know, because at this point you could be having the mindset that, oh, I'll just look at the price. By the time price gets close to the 50 period moving average, I just sell because price is good. No, there are other things you need to look out for. The chart part, the candlestick pattern, the market structure. Is there an overall uptrend or a downtrend? So these are some of those things you need to also consider. But basically, you could see how this 50 period exponential moving average has helped us to define the market clearly here. So now this is what I want to go to next. Now is the what? You look at breakouts, support and resistance. You look at tests. So basically, what the diagram I have here is what? An horizontal line that was formerly what? Support. But now, when price breaks through your support, as a trader, the first thought that should come to your mind is what? Still watch out for that zone to be tested as what? A resistance before price what? Goes what? Downward. So if there's a break, and likewise the same thing goes around. If the price break through the resistance and go upward, that's a break, defeat. If the buyers defeat the sellers at the resistance zone. So you could look over for the future as that resistance zone being what? Support. So it's like they are switching place. So the sellers take the buyers region, the buyers take the sellers region after either maybe they have been defeated in the battle. I hope that's interesting. So, okay, so this is the other way to the upside. So you see that the price here was actually a resistance. Now, at this level, price was resisting it. That's using the earlier market analysis of price movements in the market. But price broke through it, and that's the plot we captured here. And this breakthrough is what we call what in trading breakout. So when price break through either a support and resistance, it's called what? A breakout. So there are people, you could have a breakout strategy, or you could trade. So that is one thing. If you're talking about trade a breakout strategy, support and resistance is one key element that you need to factor in even in your trades. So let's move ahead. Now here you see what? Resistance turning what? Changing ground. Now, earlier, remember I told us that the resistance is something that the resistance pushes the price what? Downward. And in the resistance zone, we have what? The sellers gather in the resistance zone. While in the support zone, who do we have? We have the what? People that are ready to buy. People that are ready to buy. So I want us to have a kind of a good kind of imagination here. Why? Because you could look at this, the sellers as a kind of a military. You could see them as people that they war, and whoever wins, they switch sides. So that's how it is. Now you could see that the group of selling ninjas here. Now what happens here? The price, it came up here, and at this resistance zone, you see there's something we call here. You notice something here. They are weak. That's the wick of the candle. You see the wicks here. 1 week, the second week, and the third week. Now, this week should enable us to know that what? This zone is a what? Is a resistance zone. So now, as a trader, what would prompt you from making good decision here is what? For now, before the price flips, you see that this momentum candle breaks or forms even above and closes above the what? Above the resistance. So as this, now you could see this candle as an activity that happened between buyers and sellers, them fighting, fighting to, I'm just using the word fighting so we could, relate to it better. Now you see that price breaks through, this resistance zone. Immediately price broke through this resistance zone. It's not called resistance again. It's called support, because as it broke through the resistance zone, the sellers, they were what? They were defeated. They had to look for another ground. So this zone has now become the new what? The new support. And support, like I told you, who are pushing the price up, the buyers are in the what? In the support region. So the buyers are the ones from their region. They push the price. By the time they get to the region of the resistance, which is the sellers, they actually conquered the ground. They gained their ground, and their ground became their playing ground, if you would help me use that word. So basically that's what happens when it comes to price flipping to hold what? To hold new support. So here you see what? Resistance level, price moving up, moving up, moving up, and at this point price what? Resisted this area. So as a trader, you don't want to be what? Buying at this zone. You don't want to be buying at that level. Or if you want to, you don't even want to, let's not go there. You don't want to be buying at that region. So as a seller, you could what? Sell at that zone. If you sell at this point, you'll be targeting what? This previous what? Support that was already conquered by the what? Buyers. So as the buyers already conquered this region, it's already their region. So price keep what? Going up and going up. So the sellers had to, change region to this point or to this side. So the resistance, pushed the market down. They finally pushed the market down here. So because this price, there's a breakthrough here, price respected this. So price actually, target up again. So at this point, the price was actually what? Pushed down again by the resistance. Now that's at this up area. Price was all pushed down again and again. So you see what here basically we have two tests for the resistance initially, and we have another two tests. Now you could see it's like a sideways, sideways channel. And now what would you see? Now, one bonus tip I want you to note here is that what on this candle that breaks through the support zone here, you notice that the close of the candle, the candle closed above even the highest point of the wick of the resistance. That's one thing I want you to note. And you see that the wick of the candle that broke the resistance zone also closes high enough above the regions that was earlier marked, the two regions that were earlier marked here. So you see again, as the buyers in the buyers conquered the sellers in the support zone or in the support area, and gained their ground. Now you see that this place has been what respected. So resistance flipping to support, resistance flipping to support on uptrend. So I just want you to note it down. On an uptrend, resistance will turn into support. And later we'll be looking at the other variation of the chart. Now you could see what we have here: resistance, price resistance. See the long wick. Now traders, they feel the market. Maybe one thing that traders also consider here is that they feel when the price is at a point, they feel that, oh, at that level, they feel that, oh, I cannot buy this particular instrument at this price. Let it fall before I buy, or let the price. I'm not ready to buy now. Let the sellers be buying. I'm willing to buy when the price drops. Just like I gave the example of the marker earlier. You don't want to buy a marker that's been sold for 15 naira for 1,000 naira. Why? Because the trader just hype or just increase the price. No, you want it to go back to the normal price before buying. Now that's what we see here. This is the first resistance zone. You see the wicks of these candles that we have here. And this wick that we have, it signifies what? Rejection. The longer the wick, the more, or the support, it shows that what this support cannot likely hold. That's for this first one I'm saying. So you see that it could not break. The buyers tried all their possible best to break markets above this zone, but price could not break above it. But rather, instead of price breaking above it, what did price did? It went down and tested it twice again. So if as price is going down, or price get here at this point, that there's actually a strong resistance here, what would you look up to doing? You look up, if you are buying, you look at what? Exiting the trade here. You see it? So that's one of the ways support and resistance enable you to exit your trade in time and on time. So here again, price dropped here. So price dropped, rallied up and dropped again. So at this point, now I'm actually kind of teaching us something about breakout here. You see this breakout, the candle, the momentum candle that broke this break, that broke the resistance. It closed far above the wicks. Okay, far above the candle. Let's just say the candle. And if you measure the wick too, it broke above the wick of the highest wick of the resistance area. That's on this one that I have just highlighted. So that's it. And remember earlier, just like I've said, when price breaks through this resistance zone, what happened? It usually turns to support. And when that happens, it tells you that you are looking at an uptrend. So it's as simple as that. So you have it here, up, it goes up, it comes down, it goes up again. So you see that as market dynamics are constantly changing, a level that was once viewed as overpriced is now viewed as a bargain. So you could see that now that people, because of now what will enable you to know that people maybe look at that zone as it being overpriced because of the rejection. Now you see that price is conveniently just sitting down on it, right? You see it, and the wick is, far below down. So next, let's look more into it. Then lately with the round of week live chart examples. So you notice how here the support, how the shadows of the candles break the support, both ends up closing above it. So little here, you think, oh, it's already breaking through. Let me go into the market. Now you have to, that's one of the reasons why you need to consider the type of candle. And this is one good thing I want you to look at. Remember what I told you, that's identifying false breakout. So you see that most of these candles are what? Indecision candles. So you see this long indecision candle here. So you cannot place trade when the market is showing you what? Indecision candle. So instead of going the same way you have been going, you should know that, okay, because this level has been respected earlier, okay, why don't I consider the option of what? The option of buying. So that's one thing that you want to, consider at this place. So you look at the two lows of it, because it's formed double low here. That's one here and another one here. Some call it a W pattern if you have it, but then it's basically just having two lows, and two lows on the support. So basically that's what you have there. So you see that after this indecision candle, it's closed by a what? By a big momentum candle, which also, if you could go ahead and time, you could, see that the market is on an uptrend. So now I want us to would have to look at real life chart right now at the moment, so that we could see how to draw it, because we've looked at three ways to draw the support and resistance. And as we go on, as you digest and understand this in our later classes, we'll be looking at more deeper analysis on how to use support and resistance. But for today, I'm going to show us how to draw them using the trend line, the horizontal line, and the what? And the last one, which is your support line. So let's go into that now. Let me look for my chart. All right. So I hope you're enjoying the class. Good. Okay, give me a minute, please. All right. So here I have a live chart here. So this is actually Pacific Union's web trader. So if you like it, you could go to www.pacificunion.com, and beneath, or you could ask your account managers. They'll tell you how you could access the web trader. The web trader is actually good. You could use it for your MT4 or your MT5 as well. So basically, it's just the same way using your MT4 that you have, basically downloaded. So here we have the Euro USD here, and you see already that I already mapped out the zone. Okay, let's go to daily. Let's go to daily. Okay, my chart is loading. Okay. While it's loading, let me come back here. Okay, let me come back here and let's zoom out a bit and see it. Good. So you notice something. The price. Okay. All right, you see the price, tested this zone once, tested it twice, and what happened at this third round? It breaks. So now it breaks to form what? Another, on a downtrend. This is actually Euro USD series. A lot has been happening here. So, but if you want to draw them, this is what you'll do. This is your horizontal line, which is the first tool that we looked at in drawing your trend, your support and resistance. So what you have here now, you've noticed that there's a strong price got to this point. Okay, let me zoom out so you could see it. Now price got here, and instead of price to break, price respected this region, could not break, came over to this second one, tested for the second time. It went up again, almost tested but didn't test. Tested it here again before breaking out. Now, I want you to note something very interesting. At this point, you see that this candle rather that broke this support and resistance actually, closed below the lows of the other wicks that you have there. So these also can signify what a change in trend, sorry, a change in trend as you would have it. So this is one of the ways to draw it. And one of just a quick simple trick to draw support and resistance very easily. So you could change your candles from your charts from candles to line charts. So you could have it this way. So you could select your what? You could select your horizontal line. Now you could just look for points at which price tested. So it's not something now. If you cannot see it, you can't see it. So there's no need in forcing trying to draw it where it's not there. So for this chart that we're in now, we're looking at the Euro USD for the 4 hours. So we could look at this point. This is the highest point at this point. Price has actually tested this point as resistance. So let's look back in time if price has respected that zone before. Okay, you see. So you see here at that zone, this zone that I just marked off, you see that that place was support before it was actually, broken. Okay, you see, okay, you have this 19. The first one that I mapped out is 1.9001 as the resistance. So you have this resistance here. You could go back in time, you still have it here as resistance. You could still have it here as resistance. So going forward in time now, you see price has not broken up to that end before. So now imagine something at this level. So imagine still by the time you saw that, okay, price has been on a bullish trend, maybe from this downside, from this level to this level, price has been buying. Now, you don't want to, for one reason or the other, you just open your chart and lo and behold, you are what? You are in this highs and this top, in this place. So what support and resistance would help you to do now is to do what? Is to refrain from what? Buying here, because what earlier on, price has what respected that zone before. So you could just keep that zone instead of deleting it. You could keep it to reference it another day or another time. So let's go back in time. Let's go to the current time. So you could see what? You could see that this market, obviously, it's on the what? It's on the downtrend. Let's change it back to a candlesticks. So one of the ways you could draw the your support and resistance is using the what? Using your trend line. So you could just select your trend line is just here. You see it, it's trend line. So you could just click on it. By the time you click on it, you would use it to connect two points together. That's two lows. Use it to connect the wicks together. At least you must connect at least 2 or 3. Okay, you see it. So you could see this as a dynamic support, or you could draw this as a dynamic resistance. Okay, let's see. Let's try to get the maximum number of touches. So, okay, price touches that is this. Okay, and remember I said you could look at support and resistance as a zone. So now, as someone who wants to sell or who is selling now, you could look at, okay, when the price gets to this zone, let me look for what? More bearish opportunities. If price get to this place, why? Because price has been testing it on a downtrend, and if you want to extend it up to this, let's see. Okay, all right, you can't draw a trend line like that. So basically, this is what you do. You extend it up like this. So here you could see that price have got to this point at this level. So we could expect you, a trader now, to sell at this when price gets close to this trend line, because you know that, okay, the market on overall basis, it has been going down. So you could expect to do sell at this level. So by the time the price gets here, if you get a good confirmation candle, you could do what? You could sell at that point. So that's one of the ways you could use, and this is called a dynamic resistance, because price gets here, is being rejected, it goes down. 1, it tested it 1, 2. So you may be looking at the third test. So when price tested it for the third time, so you could be looking at selling at that point. So by the time price gets here, So you could be looking at what selling at that region. So that's one of the ways to draw a trend line, a support and resistance. So you could have it here, and you could just plot it here, just for you to have something as resistance. So that's just that's what you could use. So the third thing that we looked at is what is the moving average. So here, to use the moving average, you could just come to insert indicators, you go to trend, insert indicators, you go to trend, from trend you go to moving average. So you could use, we talked about the 50 moving period moving average. You could use the simple exponential, but the F for the purpose of this class, let's go for the exponential. So you click on OK, it plots it out for you. So let's see if price have tested this dynamic zone. So you notice something at this point. Okay, let's go back in time and say, okay, price actually respected it here as support, but it was actually a breakout at this point. And this was also, so you notice that price have not been able to break above this what 50 period moving average, which some refer to as what a golden moving average. So you could see it as a 50% golden moving average. So that's price as what has failed to break above what above this moving average. So you could see that it's tend to give a barrier even for the market. So moving ahead, let's see it. So like we have here currently, so you could have as a trader, you could look forward to what this zone, that's when price get close to the moving period average. So when price what breaks above it, maybe it's telling you what it's telling you that the trend has what a trend has what a trend has changed. So but now it's signifying a what a downtrend. And for you to take best part of it, when price gets close to it, you can choose to make a what make a decision. So that's the three ways by which you could use to draw the support and resistance. So at this point, at some point, you notice that it acts as, generally it has acted as what? It has acted as resistance. Okay, here price acts as the 50 period moving exponential moving period moving average served as what? It served as the support here. 1, 2, then it broke through, now turn to resistance. So one more thing, I think our time is almost going up, but I want us to try one more so we could end this class. So I want us to try okay, let's use GBP USD. Okay, it doesn't work like FT4. Okay, just click right click, chart windows. Okay, you can click on 30 minutes. Okay, while it's still loading. Okay, if for some reasons I don't know why it's being a network, it's not load. Okay, okay, let's just stick with this one. So for the moving average, trend line, and horizontal line, you use them basically, to just confirm what you could see. And this, just to round off the class, I want us to note something. Now, once you zoom out your chart, you notice something that what the market respects these levels of support and resistance. So one of those things you would not want to do is to do what? Go against the support and resistance if there are no what? Confirmation. So for you to trade against that, you need to look for what? Confirmations. So if you have any questions, just I've come to the end of the class, and thank you. Thanks to everyone who joined, who participated along. So we're going to be ending the class right now. So next, we'll be continuing the session. We'll be looking at other indicators. We'll be looking at how you could analyze the market better in a more profound way. So it's actually, it has been a nice time here, and I hope you enjoyed the class. I hope you have been able to draw your support and resistance. Remember, support and resistance are areas within your chart, that are keen to buyers and sellers. While support is a level whereby buyers is a buyer zone. You could look at resistance as a what? As a seller zone. And what you use them for is the what? You use them to know your entry, use them to know your exit, use them to make profitable market decisions. All right, that's good. And one other thing again is that you could draw, or you could confirm or draw or identify support and resistance using three major tools, three free major tools, which is the first things first, your horizontal line. So you could just click on it and look at the highs and lows of the price. Then you just plot it out. That's plotted out automatically for you. Then you could use it to still plot your either support or resistance. Then apart from that, you could use your trend line to plot the dynamic support and resistance. So you could have something on this line. Exactly. So, and using the third one is you could use the moving average. So you go to insert, indicators, and you click on, insert, indicators, trend, and moving average. So I use the moving average. So if you use any of the moving average that you want, then this shift is to just guide you in, give you a kind of simulation of the candles shift of the next candle. So it's actually something done arithmetically. So by the time you click on what OK, and you could click on visualization, and just maybe if you want it to only show in 1 minute or 2 minutes, you could just do that settings here. And by the time you click on what, you click on OK, automatically it's affected in your chart. So you could see it here. So you could draw the 50, 100 period moving average. So already we have 50. So let's just draw the 100. Here we have 100. Okay. Apply to close. Okay, you see that? Yes. So that's the 100. So you could draw the 200. Insert. Moving average and draw the 200. So you could look at correlations and synergies between the moving average in order to make good decision. So you notice all the prices, price has not been able to get to this area, this first one, which is the 50, the 100 and 200. So it's nice having you people around today, and I hope you're able to watch, understand, and if you have any question, you could drop it in the comment section. We would be sure to reply. So it's a Pacific Union, more than trading, we expect you to trade more profitably. So I want you to attend the other sequence of this class, because one class builds on the other to enable you to have a strong foundational knowledge of trading in the financial market using technical analysis. So it's nice, and this is Joshua again, and have a happy trading. All right, bye bye everybody.